Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at the small cap company I just bought in my high risk, high reward growth stock portfolio that now has a value of over $6,300, and I'm up 15% on this small cap portfolio. So if you're a subscriber to the channel, you know I have my main dividend portfolio that has a value of $109,000, where I invest in blue chip dividend paying companies. But I also have a smaller portfolio that I keep completely separate, full of SPACs and small cap companies that have a lot more associated risks, but also have the potential to see faster accelerated growth. And in this video, we're going to take a look at the newest company I've added to this portfolio, and it is ticker GENI, which is Genius Sports. The company operates within the sports gambling sector, which I believe is going to have a ton of potential to continue to grow for many years going forward. And in this episode, I'm going to share with you the reasons to why I bought Genius Sports, go over the company's investor presentation, and the future growth potential. And overall, you can see some big names I own in this portfolio include Tattooed Chef, Palantir, Neo, and Virgin Galactic, as well as a few other small cap companies that I have discussed on the channel before. So overall, before we take a look at Genius Sports in detail, I'm going to ask you to please hit that like button and subscribe. I'm the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos, and of course today, we're going to focus on Genius Sports, a leading company in the sports gambling and data sector. So currently in my portfolio, I now own 20 shares of this company, and my average cost per share is at $17.92. And the current share price of the company sits at just above $18, so I'm up around 1.34% on my current Genius Sports position. I just bought into this company this week, and I plan to hold for the next few years going forward to see if the mass market growth of the entire sports betting industry will lead to some exponential growth in Genius Sports' total revenue. And taking a look at the company stock chart, they currently trade for $18.16, and they're down around 0.5% over the past week. They have a market cap at $3.36 billion, and this company hit the public market in 2021 through a SPAC merger. So this was a SPAC. I did own the company pre-merger, was up on that position, and sold it once the deal was announced. And now that the company has fallen back down away from their high point of around $25, they have declined over 27%. I decided to start another position in this company after I already locked in around a 30% gain on my original trade. So this is one of the few companies I've actually swung trade and bought back in at a lower price after the SPAC deal was completed. So like we saw, I bought 20 shares of this company, who is a leader in the sports data industry and owns the exclusive rights to the NFL data, which is very, very important for the company's growth over the next few years. And if we jump into their investor presentation, they've started out 2021 with some great financial results. First quarter, revenue grew 52% year over year to $53.7 million. And their adjusted EBITDA in Q1 was up 414% to a positive $9.3 million. And their deal with the NFL was a long-term deal. It was a 6-year strategic partnership, which is incredible for the company. They're still very early on in their growth and development, and to lock in one of the most popular sports leagues on a global scale for the next 6 years, I believe will lead to a ton of revenue and strategic growth going forward. And they also increased their full year guidance and now are expecting $250 to $260 million of total revenue, up from their previous guidance of only $190 million. That's a major increase. $190 million of expected revenue, all the way up to around $250, is absolutely major for such a small company. And now that sports are coming back, they're being played all around the world, this company has a lot of potential to see exponential growth over the next few years. And taking a look, they're partnered with all the major sports organizations: the NFL, the MLB, the NBA, the NCAA, the massive soccer leagues, lacrosse, PGA. Pretty much every major sports league within North America has a partnership with Genius Sports. And they also have a revenue share model with all of the big gambling companies: Caesars, FanDuel, DraftKings, BetMGM. All the major players in the online sports gambling industry are all partnered with Genius Sports. They're currently authorized in 13 US states and 3 tribal jurisdictions. And going forward, their ad tech business is continuing to grow at a high rate quarter after quarter. And right now, they are partnered with over 400 sports leagues. So this company is not solely operational within the United States. They have global operations with over 400 leagues all across North America, South America, Europe, Africa, and even Asia. And they have relationships with international sports betting companies as well, in more than 100 different media and advertising brands in the sports sector. So they have so many different partners. They're working with so many of the largest organizations in the world of sports. And going forward, I think Genius Sports is in a very strong position to see long-term accelerated growth. And next, we're going to take a look at a diagram that shows how Genius Sports operates on a day-to-day basis. So this company acts as the middleman between the official sports leagues and the actual sports books. So how it works is Genius Sports signs exclusive deals for all the official live data from all the major leagues, including the NFL, MLB, NCAA, and of course over 400 more. And what happens is all the live events within all of those leagues process a ton of gambling data. Every second of every game has an impact on different odds, different spreads, and gambling outcomes. So what happens is the millions of different data points generated from every single live sporting event passes through Genius Sports. They use their proprietary technology to turn those millions of different random data points into usable, tangible information that they then pass along to the online gambling sports books. And as there's a greater demand for gambling, there's going to be more need for increased data and speed, which of course increases the demand for Genius Sports because they have the official rights. And because they have these official rights, like we saw with the NFL deal, these are long-term, low-churn relationships. These major sports leagues don't want to just continuously switch the different data processors that they have for their gambling information. They want to pick a company that they trust and operate with them over the long term. So that's why these are low churn, very strong relationships, because like we saw with the NFL, for example, that's a 6-year deal. So this cycle continues to happen as gambling continues to grow and all the leagues, the actual technology company like Genius, and the online sports books all continue to benefit. And if we take a look, right now the company generates revenue in 3 main sectors. The largest, of course, is their data and streaming, making up 74% of the revenue, which is how the company operates in this diagram below. But of course, they also generate some revenue from their media division, which makes up around 15% of the total top line, as well as some different revenue sharing with the sports leagues, making up around 11% of the total sales. And if we take a look, year over year, the company has seen some consistently fast revenue growth. Overall, from 2016 through 2020, the total revenue grew 250%, and year after year, total revenue continues to expand. And what's impressive is even throughout the pandemic, when sports were shut down all around the world, pretty much on a global scale for over 6 months, we stopped playing live sports, so there's pretty much nothing to gamble on, but the company continued to see growing revenue, which is incredibly impressive. And why I bought this company is for this pie chart right here, and this was a very key factor. Their recurring revenue makes up 60% of their total top line, meaning year after year, their recurring revenue will continue to flow into the company. So 60% of their total sales, so more than half of the revenue generated, is on a recurring basis, and I find that very, very attractive. And taking a look, the top 10 customers only make up around 30% of their total revenue. So they're not reliant on one single league or one single sports book to generate a majority of their sales. The top 10 customers make up around 30%, so they're highly diversified across dozens of different customers, which really shows the strength in their business model over the long term. And we can see that in 2020 for the full year, they covered 240,000 events. So for a sports data processor, the amount of events covered really shows how much revenue they can generate over the long term. So every single year they have to strive to capture more and more events. And we can see they've been doing that since 2015 through 2020. Every single year they've seen some massive expansion in total events covered. And in 2020, they had the exclusive rights to 110,000 of these events. So pretty much half of the events covered, they have exclusivity to. No other sports data processor can operate and do what Genius Sports is doing for 110,000 events. So once again, this is pretty much like a monopoly type environment for a bunch of these deals. So I love owning the company that's the sole provider of this information to a fast growing sector. And if we take a look at the online sports books, month after month, their user base continues to see rapid growth. And we can see that they're operating in markets projected to see rapid expansion from 2020 through 2025. Of course, the United States is the fastest, growing at a CAGR of 31%, but Europe, Asia, and the rest of the world are all projected to grow at a double-digit rate over the next 5 years going forward. So their entire market is seeing massive, massive expansion, and I find it really attractive to get into this company at a very early on to see if they can continue to grow as the market continues to expand. And taking a look at their revenue projections, so for the company through 2020 through 2022, they're expecting a CAGR of just below 30%. From $145 million of total revenue, they were originally projecting $190 million for 2021. But like we just saw over the past quarter, they have actually bumped up that old projection from $190 million all the way up to $250 to $260 million for this current fiscal year. So if we take that into consideration, they were forecasting $238 million of revenue next year in 2022. But right now, in 2021, they believe they're going to surpass their original expectation. And over this full year, they're expected to go from $145 million all the way up to $250, which is incredibly impressive. Their growth now that sports are back on and operational all around the world has been phenomenal. That really ensures me that the company is going in the right direction. Their 2022 full year revenue, they're going to surpass that expectation in 2021, which is absolutely impressive. And their adjusted EBITDA for 2022 was projected to come in at around $68 million, which I believe they'll achieve in around that number in 2021. And like we saw from the pie chart, at least 60% of their total revenue is from contractual minimums. So it's pretty much guaranteed. In the long-term deals they sign with these big sports leagues, the minimum payments make up 60% of their total revenue. So if the companies take on no add-ons, that's incredibly strong for this business. And I think Genius Sports has very strong leadership and executives at the top of the company, and they've developed a business model that is set up for long-term growth. Right now, they have fixed minimum guarantees in all their different contracts, which actually include escalators over the contract term. So every year or every other year, the actual minimums continue to grow, leading to long-term increased revenue flowing into Genius Sports. As well, they typically sign 3 to 5 year commitments with historically low churn. So like I mentioned, with the NFL, for example, that was a 6-year deal. So the company signs longer term deals with the major leagues and the different sports books to be the sole data processor. And why that's important is because once a company uses Genius over a longer term period, it's going to get harder and harder for them to just switch. These are low churn relationships. Once they build up the connection with this processor, once the entire system is set up and is working properly, it's going to be very difficult to just switch to a different company in the industry. So I think Genius, now that they've already locked up a lot of the major leagues, will be able to continue these relationships over the long term. And all their agreements include different growth levers that enable the customers and the client to continue to accelerate revenue generation as the overall market continues to grow. And no customers have access to all of Genius services at their contractual minimums. So no one is making minimal payments and has access to all of their services. So it kind of forces the customers to get the add-ons and increase in the revenue if they want more of what Genius can provide. So overall, I think the company and their leadership has set up a very strong business model that will continue to grow as the overall sports gambling industry grows over the next few years. So Genius Sports is definitely another company that has a lot of risks. They're not yet profitable. They're a very small cap player in the online sports gambling market that trades under ticker GENI. And one thing that I want to put into perspective is I have a massive dividend growth portfolio for a person of my age. Sitting in my early 20s with a dividend portfolio made up of $109,000, I've already associated myself with a strong investing mindset. So having a smaller portfolio worth only $6,000 and change is nothing too risky for my own personal investing journey. And I want to share this with you because I don't want individuals to take on a lot of risks without understanding the actual potential of major losses going forward. For example, if this portfolio were to go in half, were to drop by 50%, I would not be worried because I'm not allocating a ton of my main capital to this portfolio. This is a little bit of money I add in every single month, and I know there's a ton of risk with all of these different holdings. And take into consideration that I only bought 20 shares of this company worth around $363. So this is only worth a fraction of 1% of my entire investing portfolio. If you include both portfolios, this makes up less than 0.25% of my total assets. So it's very, very small, and I'm not too worried about if this goes to zero, and that's why I'm making these smaller plays. I'm not going all in with tens of thousands of dollars into any of these companies, and I want to be very clear that I'm making small bets for small potential growth over the next few years. So take into consideration that although I am buying these companies, do your own research before you make any investing decisions and make sure you speak with a qualified professional. These are not in any way major bets, small little gambles to see what happens over the next few years and to give us content to talk about on the channel by following along with some exciting growth companies that may be a little bit more fun to talk about rather than just the traditional blue chip dividend payers that I own in the main account like a Pepsi or a JP Morgan. So thank you for watching the video all the way to the end. I'm going to kind of wrap it up here. We took a look today at Genius Sports, a data processing operator within the online sports gambling sector that I believe has a lot of potential to continue to grow, and I did 20 shares in my high risk, high reward growth stock portfolio. So thank you for watching all the way to the end. Please hit that like button and subscribe if you already haven't done so.